Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily briefing for Friday the 9th of the 4th, 2021. Time is 0500 GMT, Asian session coming to a close, European session firing up, our lunchtime North American US session. Right, yesterday, Thursday the 8th then, we had a positive opposed driver in the yen at plus 164, front and back door flows mainly coming out of the pound at minus 118, out of the dollar at minus 104, and the euro was the positive rock at plus 58, activity plus or minus 222. Over the week then, this is the most relevant because we're Friday, this is from Monday the 5th, open to about 15 minutes ago. We've got a negative opposed driver in the pound at minus 570, front and back door flows mainly going into the yen at plus 433, into the euro at plus 316, and out of the dollar at minus 179, which is the negative rock. Activity plus or minus 749. So significant activity this week. Over the week then we've had pound weakness driving and strength in the yen and the euro. Right, intraday then, so what's happening in the Asian session to about 15 minutes ago, we've got a negative unopposed driver in the euro at minus 25, no backdoor flows, but the opposing positive flows mainly going into the yen at plus 13, into the dollar at plus 11, and the pound is the positive rock at plus 1. Activity plus or minus 25. Right, what's going to knock it about then? So what have we had? Today, Friday then, we've had China's CPI and production price index. They've been positive, but for the year, but March was a little bit soft. But the producer prices are coming up. Right, so the CAD, we've got the employment change later on, which is tier 1 data, and that's about it really for Friday. And looking into next week, we've got the Wednesday the 14th, we've got the New Zealand rates decision, which we would imagine will start, some cracks will start appearing in the New Zealand dollar, right, if not earlier. Right then, so let's have a look at what's been happening in the flows and the wider asset classes. Our trades have come back yet again. We're about plus 700 now. We had a reasonably tough day yesterday, but we'll talk about that later. Right, euro. This is the full euro complex. The euro is weak except against the AUD and the NZD, which are weaker. The yen is strong except against the dollar and the pound, which are stronger. The pound is strong across the board. The Swiss is strong except against the yen, the dollar and the pound, which are stronger. The CAD is weak except against the euro, the AUD and the NZD. The AUD is weak across the board. The NZD is weak except against the AUD, and the dollar is strong except against the pound, which is stronger. So what have we got? We've got pound strength coming in, and we've got Australian weakness, and take your pick in the middle. Right, so let's look at the wider asset classes before we do some analysis. Right, so we've got US dollar index. What's been happening with that? Well, basically it broke, came back, it broke, and it's it's about there, just above the original break. So it's come back a fair bit, the dollar's softened. Right, gold, off the back of this, gold has come up to 0.28 from the model floor. Oil came off like so, and it's now about 0.5 from the model floor stroke high, so it's halfway. Hasn't come back from the OPEC yet. Wall Street basically broke again, and it's now near the highs. Likewise, the S&P. The S&P's got a similar look to it, and the tech basically is has come fairly right back. It's nearly at the it's 0.05 from the modelled high, so it's within 5% of our modelled high, so it's nearly at the previous peak. US 10-year and the bund, so this is the price. Remember, you've got this sort of situation here. The price has come back up, so the yields have come off. It's about 0.33, and the bund is about 0.5, so the yield gap slightly closing, albeit running slightly parallel as well, so there's not much in it, but arguably European yields relative to US yields have come up a bit. Copper, if you remember, had these 5 pumps, came back to the second pump, went to base camp, and it's now, as usual, it's operating at the second pump, top of the second pump. Right, US steel, sold off at the double top. It broke, and it's now about 0.4 from the high, so from the double top. So US steel has softened, no doubt about that. Right, so let's have a look. Right, so as you say, our trades have been hit really by the soft pound, the resilient New Zealand dollar, and relatively now the soft AUD, all of which are noise driven as far as we're concerned. Right, so we're short the USD against the euro, the pound, and the AUD. We're short NZD against euro, pound, CAD, and AUD. Right, so that's our positioning. We're about plus 700 points profit at the moment. Peak 2000, approximately 2,900, and so the swing is 2,200 plus or minus. Right, so that's what we're up to. Basically, what's going to happen then? We think we don't see any reason to change our view. Next week we've got the New Zealand dollar coming in on the rates decision. The New Zealand dollar is punching way above its weight. It's the second highest complex. The data cycle doesn't really justify any of this. The AUD shouldn't be soft at the moment. It's got a rising data cycle. Sentiment is positive to a certain degree. So this is just market manipulation as far as we're concerned. So generally we'll be sticking with it. We'll be expecting a rise in the AUD, a rise in the CAD. The pound's been hammered off. We're going to expect a bounce in the pound and a fall in the dollar, a rise by default in the euro, etc. So we're expecting our trades to come good. Now, being Friday, tomorrow we've got the weekly review for the flows and the weekly review for the data cycle. So try and catch those. It'll fill in some gaps, and if not, see you Monday for the daily briefing. Thank you very much.